I review various income-oriented, especially covered call ETFs on this channel, and to be honest, it's really the content I love doing the most. I pretty much know these funds by heart as I've owned many of them myself for years, so I feel very comfortable in talking about them and reviewing them. So I decided to start a new series where I review my favorite fund managers who have covered call ETFs and other income-oriented funds that are designed for passive income investors like us. So in episode 1, I covered BMO. In this episode, episode 2, I will cover Harvest Portfolios Group. So Harvest is one of my favorite Canadian fund managers that really offer a nice lineup of covered call ETFs. So in this video, I will review all of their ETFs, their whole lineup. Obviously, I will focus a little bit more on the covered call ones, on the income-oriented ones, but I'll quickly go over the other growth ETFs that they have as well for you growth investors out there, because I think they have some pretty cool growth-oriented ETFs that focus on some really cool emerging sectors of the market. So let's get to it. Let's review Harvest's entire lineup together. I just want to take a quick moment to thank the sponsor of this video, Harvest Portfolios Group, one of my favorite Canadian fund managers, really specialize in income-oriented ETFs or covered call ETFs. I own many of them myself, and they actually just released a brand new all-in-one income-oriented ETF called the Harvest Diversified Income ETF. The stock symbol is HDIF, which targets an 8.5% yield annually. So make sure to check out their website and their fund lineup. The links are in the video description below. All right, everyone, Harvest Portfolios Group. I'm on the homepage of their website. Don't forget, guys, when you're doing research, always go on the fund's official website. That is where the most accurate information will be. So I'm on the homepage here. As you can see, the homepage is promoting their new ETF, the Harvest Diversified Monthly Income ETF, which I will review. But first, I just want to bring your attention to a link. So if you go to Learn Covered Call Strategies and the third option here, call option strategy, it's very important that we review what the actual covered call strategy of Harvest is in general, right? Because we're going to be focusing a lot on their covered call ETF. So if you open that link, this is the document you will get. I just want to show you real quick that Harvest doesn't have a covered call strategy that's set in stone like BMO does. They have what I like to call a dynamic or a flexible covered call strategy. So it basically, what they're saying here in terms of how much of the portfolio they cover and how many covered calls, they in terms of a maximum portfolio coverage, they write 33% on the fund. So they will not write more, or they will not have covered calls on more than 33% of the entire portfolio. That means the rest of the portfolio will participate in any growth or upside or capital appreciation. So maximum is 33%, but it doesn't mean that they will write on 33% of the portfolio. That's just the maximum. So very, very dynamic. They check it out every month. They review it every month very often. As you could see, flexible multiple strike levels. So it's not, set in stone in terms of at the money or out of the money. They really have an active and flexible covered call strategy. So really cool document. You could read the whole thing if you want. That explains, their covered call strategy in general. But like I said, it's very dynamic. And once again, just go to Learn Covered Call Strategy. It's this one here. And they also have other cool documents here that really explains how covered calls work. So make sure to check that out. So if we go to products, this is where you will see the entire fund lineup. So obviously on the left-hand side, you have the equity income ETFs. This is where the covered call ETFs are. Then in the second column, you have some equity growth focused ETFs. So these are really their growth focused ETFs, no covered calls on these. They have a few structured funds, and of course they have 2 mutual funds, which I won't be covering in this video, but I'll cover everything else because we are retail investors primarily and interested in publicly listed securities. So we'll focus on the first 3 columns here. So of course I want to focus more on the equity income ETFs. As you see, they have a nice lineup here: the healthcare, the brand leaders, healthcare brand leaders, ETF tech, utilities, Reit, energy, US banks, their new all-in-one fund. And this one I won't be covering because they have terminated this fund. It's going to terminate soon, so we won't cover it. So let's go through them one by one because these are the ones I really want to focus on. So the first one, and this is probably my favorite a sector specific ETF, covered call ETF that they have, and it's also their biggest one. It's the Harvest Healthcare Leaders Income ETF. So like the name says, it focuses on healthcare companies, blue chip companies, really the quality companies. So Harvest, by the way, has monthly distributions. You could see that here. Their income, it's not quarterly, it's monthly distributions. You have everything you need to know here in terms of summary. This fund is almost at 900 million, so a very big ETF. You have the management fee here, how many stocks in the fund, which we're going to check out, the current yield, and of course, it's eligible for all the Canadian accounts, even the registered ones like the RIF, RSP, Lira, TFSA, etc. Of course, the cash one as well. You have the risk rating. You have the portfolio analysis. I really like this touch. It really tells you what the actual dividend yield of the portfolio is. Keep in mind that this is just the dividends, or the dividends that the stocks are giving, not the yield of the of this ETF. That would be here, 8.36. So you could see how really the covered calls help really boost the yield tremendously. This is why I love the covered call strategy. So the most important part is always what's inside the ETF. Never forget that, the underlying. And as you could see, it's all healthcare companies that we know and love. AbbVie, Bristol Myers, AstraZeneca, Eli Lilly. You have just United Health Group, which is healthcare providers and services. So it's not just pharmaceuticals, it's everything to do with healthcare, which I really like. So medical device companies as well. Of course, you have Pfizer, you have Johnson & Johnson. So if you scroll down, you will see the actual subsector allocation. So like I said, not just pharmaceuticals, you also have healthcare equipment, you have the healthcare providers, life sciences tools, etc. And you could see the country breakdown. Of course, the best healthcare companies, innovators are pretty much in the United States. So really awesome fund. This is probably, I like to say, their flagship covered call ETF. And like I mentioned earlier, the distributions are monthly. And what I really like about Harvest is that their distributions tend to be very consistent, almost like set in stone. So this ETF, HHL in particular, their distribution is 5.83 cents a month. And it's been that way since the beginning. It's never changed. You could go through all the years and it's still at this distribution level. Really awesome. Really cool. Really a one-stop shop for your healthcare exposure here. Next one is brands. So this is a really cool and innovative one that focuses, just like the name says, on the big, powerful companies that have powerful brands, that are really marketing geniuses. So we could look through the, they're all monthly, of course, the distributions. The current yields 6.52 on this one. And I just want to go to the holdings because they're really powerful brands. I'm sure you will know all these companies by heart, guys. Walt Disney, Verizon, UPS, Google, Apple, Visa, Shell, McDonald's, Procter & Gamble, Bank of America, Pepsi is here. So really, Nike is here. So really the companies that have the best brands, powerful brands in the world. You could see the breakdown here. So you have tech, you have communication services, which is things like Verizon, healthcare, industrials, consumer staples, Procter & Gamble, McDonald's, Pepsi, consumer discretionary. So really good mix here in terms of diversification across all sectors. Big powerful blue chip brands. And another thing to mention is that they recently on this one raised their dividend. So it used to be 5.42 cents for the longest time, since 2014. But in 2022, because the companies, these are typically dividend companies that grow their dividends over time, so they increased it to 6 cents a month. Really awesome ETF here. The next one is, of course, the Tech Achievers one. So like the name says, it focuses on the best technology companies. So if we scroll down here, you could see, once again, very nice outline here. You have the management fee, the annual dividend, which has been raised twice, by the way, on this fund. Really cool. And if you look at the holdings, you have them all here. You have all the best technology companies, not only the software, but also the chip makers like AMD, NVIDIA, Broadcom. And you also have things like Visa, which is kind of a a technology company, if you will, but you have everything you need here in terms of technology, the best of the best: Apple, Microsoft, Accenture, Oracle, Adobe, Intel, Facebook is here. So really the best of the best when it comes to technology. HTA, that's the stock symbol. Really, really good one-stop shop for tech. The next one is a defensive. Just like healthcare is defensive. This is defensive as well. The Equal Weight Global Utilities Income ETF. HUTL is the stock symbol. I really like this one because, like it says, very defensive. It has a low management fee, 0.50, really, really cool. And my favorite part about this is the yield is pretty good for a defensive fund, 7.27 right now. But what I really like about this is that it has global exposure. It's not just North America. So you have 30 electricity companies, pipeline companies, and telecom companies as well. So Bell, Telus, I'm sure is in here. Yeah, here's Telus. Then you have some pipelines like TC Energy, Verizon, another telecom company. And I just want to go down. A lot of them you won't really recognize because a lot of them are in Europe. And this is really the strong suit of this ETF, in my opinion. If you look at the breakdown, yes, you have 40% United States, 16% Canada, but everywhere else you have in Europe, basically. So you have the best telecom and electricity utility companies in Europe as well. Really, really awesome diversification and a really, really consistent monthly income here. The dividend has not changed since the beginning of this fund. It's always been 11.66 cents a month. Next one, the Global Reit Leaders Income ETF. This one, personally, I don't own myself, but I think it's a really good way for us Canadians to get global REIT exposure, real estate exposure, because this one really focuses on real estate outside of Canada. Really decent yield here of 6%. The distributions have stayed very, very consistent. You could see the once again, the REITs included in here, but I just want to bring your attention to the allocation because, as you could see, it's pretty much just 3.5% Canada. It's you know, the REITs inside here are all pretty much outside of Canada except for one. So it's a great way to get great REITs outside of Canada. Really cool fund. They also have an energy covered call ETF, HBF. And in this fund, obviously, you have energy companies. The yield's a little over 5.5 here. You could see the entire portfolio. So what I like about this one, I don't own this one personally as well, but what I like about it is that you don't just have the oil and gas producers. You also have the other companies like pipelines, for example. Here's Pembina, here's TC Energy, here's Enbridge. So you could see the entire breakdown here, and you'll see it's not just oil and gas producers. It's everything to do with energy, and you have the breakdown as well, mostly in, or pretty much exclusively in, North America here. But keep in mind that even though it says 74% United States, a lot of these companies have operations outside, or their stock is listed in the United States. For example, Total Energy, that's a French company, but it says United States here because they have a listing on the US stock market. So this one has a lot of international exposure as well. And the last covered call ETF that they have is the U.S. Bank Leaders Income ETF. So just like the name says, focuses on U.S. banks, right? They have the best banks in the U.S. in this fund, all blue chip, no small players here, guys. So if we look at the holdings, you'll recognize a lot of the banks, or you might not because we're Canadian, right? But I recognize a lot of them. Goldman Sachs, of course. I recognize Bank of America, JP Morgan and Chase, Morgan Stanley, Wells Fargo, Citigroup. So you really have the best of the best when it comes to financials here, U.S. banks in this ETF. And of course, their brand new HDIF fund, which combines 5 of the funds we recently saw together, and it adds 25% leverage in there. So which 5 ETFs are included in this one? Well, it's the HHL, the healthcare, HUTL, the utilities one, HTA, the tech. You have HBF, the brands, and HUBL, the US bank leader. So what they do is on an equal weighted basis, they combine these 5 ETFs and slap 25% leverage on it, which enhances the yield. So awesome ETF here. If you really want, instead of getting them individually, and if you're okay with a little bit of leverage, I strongly suggest this one. Really, really cool ETF, kind of like an all-in-one solution here for your covered call ETFs. Really, really nice. So that, guys, is the equity income ETFs. I also want to look at the structured funds. They have 3 of them there, so I won't be going into the brand one in detail because they kind of have a matching ETF. So if you want the brands, I would stick with the ETF here. But they also have the Australian Reit Income Fund, and they have a split fund. That's right, Harvest does have a split fund called the Big Pharma Split Corp, which focuses on healthcare. So let's just check them out real quick. So this is a closed-end fund that focuses, just like the name says, on Australian real estate. So if ever you really want access to Australian real estate, you could get it here with one fund. You have a decent yield of 5.5% here, and it's all REITs in Australia. Really, really cool fund if that's what you're looking for, Australian REIT. And then they also have a split fund, which is very similar to the holdings that HHL has, except it's a split fund and it only has 10 holdings instead of 20. So it's a little bit more concentrated. The yield is high, obviously, with the split fund. Of course, I'm talking about the Class A shares. The preferred shares typically have 4 or 5% yield. But the yield is really nice here, just under 9% for PRM. That's the Class A shares. And if we look at the holdings, it's only 10, and it's really the big guys that you expect in the healthcare portfolio: Johnson & Johnson, Pfizer, Merck, Bristol Myers, AstraZeneca, Lilly, AbbVie, etc. So it's a really concentrated portfolio of the big healthcare providers, pretty much mostly in the United States. So that does it for the structured funds. So the structured funds, the equity income funds, those are really the income-oriented funds. But I do want to bring your attention to the equity growth-focused ETFs. That's the second column here. They also have some pretty cool options. If you're a growth investor, they have one that focuses on gold giants, so gold producers. And the one that I really like the most and that I want to bring your attention to is the blockchain technology one. This is a really cool one because it focuses on all companies that are in the business or that are related to blockchain. So blockchain is the technology behind cryptocurrencies, but this is not necessarily a cryptocurrency ETF. It's a blockchain ETF, which I find is really, really, really smart. So if you look at the description, it's equity securities that are exposed directly or indirectly to the development and implementation of blockchain technology. So blockchain technology is an emerging market right now, really, really awesome. And that could be the future of banking. We don't know. It could be the future of transactions. So if you look at the portfolio, there's 51 securities in here. And there you have everything from crypto trading platforms, crypto miners, to software, digital assets. So it has a lot of companies that's not just cryptocurrency, but also other documents that are indirectly tied or use blockchain, like DocuSign. There's Coinbase, Overstock.com, for example, Akamai, and a bunch of other companies. If we just expand it here, there's Accenture, which is an IT services company. Intel is here, IBM is here, MasterCard, Microsoft, Oracle, Visa. So technology companies that will profit and probably use blockchain. So I thought this was a really good idea. Another good one that they have, in my opinion, is the clean energy one. So clean energy is also a very big emerging market. So with this ETF, it's a one-stop shop for all companies that have to do or getting involved with clean energy. So really, really good ETF here. Keep in mind, these are growth-oriented, not income-oriented companies. So another one that's really cool, I thought it was a really good idea, is the travel one. So the Harvest Travel and Leisure Index ETF is an ETF that holds companies that are related to the travel industry. Since it took us such a big beating, it's a great way to capitalize with one ETF if you're looking for that growth. So if you go to the portfolio, it's not just airlines, it's hotels, resorts, cruise lines, airlines, casinos, and gaming. There's even some REITs in here, leisure facilities. So you'll recognize a lot of the companies: Airbnb, obviously the big hotel chains, Marriott, Hilton, the big online booking companies, Booking Holdings, which I believe own Bookings or Booking.com, Expedia, and then you have airlines as well. You have, and cruise ships as well, Delta, Southwest, Carnival, Royal Caribbean. I'm sure Air Canada's got to be here, right? Yeah, Air Canada. So if you want to get try to focus, or you feel that the travel industry is going to pick up or boom in the next couple of years, this is a great ETF to get because it's all in one, it's index based, and it's a very low management fee. So really, really cool. So those are the ones I like the most, but they have other ones as well. If there's one called the Harvest Space Innovation Index ETF, companies to do or related to the space innovation coming up, shuttles and satellite providers, things like that. Really cool. Their newest one is a Digital Sports and Entertainment Index ETF. So, gaming, online esports is getting bigger and bigger and bigger. It's a very lucrative business. I particularly like, HSPN, kind of like ESPN. I thought that was pretty clever. Really cool. So this is a one-stop shop for sports and entertainment companies, including gambling as well. Very low management fees. So if you look at the breakdown or the companies, you'll recognize a lot of video game companies. I know I do because I'm a fan. Activision, Blizzard, which was just bought out by Microsoft, Electronic Arts, MGM, Resorts. So everything that has to do with online e-gaming, gambling, and sports entertainment. Really cool one-stop shop for that if you feel that this industry will boom in the next couple of years. So there you have it, everyone. I hope I did you justice by going through all of them. I know it was long, but this in a nutshell is basically the Harvest ETFs lineup. I love these funds, especially the equity income ETFs. Of course, I'm more prone to get the income oriented ones, but they also have some really cool growth focused ones as well. So there you have it, everyone, the entire lineup of Harvest Portfolios groups. I absolutely love their covered call ETFs. They offer very consistent monthly payouts, which are great for income-oriented investors who really live off the passive income, like myself, like retirees. So since we could be fairly certain what the, how much money you're going to get, what the monthly payouts are going to get. So really, really cool advantage with Harvest funds. Very consistent. These ETFs are very, as you've noticed, very US focused, right? Which is, it's great for us Canadians who typically have a very heavy Canadian focused portfolio. You guys need to keep in mind that yes, Canadian companies are great, but the Canadian market pales in comparison with the US market. The US is by far where the best blue chip dividend paying companies are, most of which all have international operations. So I especially love their new all-in-one fund HDIF, which combines 5 of their covered call ETFs and adds 25% leverage on top of that to really target a really cool 8.5% annual yield. Right now, it's actually a little bit higher than that since the US market is experiencing some volatility. So as we know, it's very tech heavy, right? So the yield is actually a little bit higher than that. Awesome yield. And I'm also very excited to announce that next Sunday's video will be a 40-minute Q&A interview with the man himself, the CEO of Harvest, Michael Kovacs. We will be discussing everything in that video, including, of course, all the Harvest funds, what their covered call strategy is, what his thoughts on covered calls are in general, how Harvest compares to other covered call providers in Canada. We'll talk about the new HDIF all-in-one ETF and much, much more. I'm very excited about it. I don't hold back on any of the questions. So mark the date next Sunday. You don't want to miss it, especially if you're like me and own many of these funds myself. I promise you will not be disappointed. Thanks for watching, everyone. I really appreciate it. Please show your appreciation by hitting the like button. Hit that thumbs up button. It's free for you. It takes 2 seconds and it helps the channel grow. So it's a win-win. Also, if you like this type of content, this channel is all about investing for passive income. There's stock picks. I got a lot of great content coming up. I'm always thinking of new content. So make sure you're subscribed and hit that little bell button next to the subscribe button so you're notified every time a new video comes out. You don't want to miss my new content. We also have a website. Make sure to check it out, passiveincomeinvesting.ca. That's where you could purchase my digital product, the ultimate DIY investing package, which is on version 3 right now. I'm very proud of this product. It's a companion tool, a reference tool to really help you build your own portfolio, whether you're a Canadian investor or an American investor. There's sample portfolios in there according to different investing styles, not just income, what I do, but there's also some growth and dividend themed sample portfolios in there. And it comes with lifetime updates, so you only need to purchase it once. So make sure to check out my website for all the details on this product. There's also a video there where I show from A to Z what this product is, so make sure to check it out. Also on my website, I offer right there on the homepage a one-on-one consultation service with yours truly, me personally. It's a 1-hour Zoom meeting face-to-face in case you want more personalized help, where I go over your situation, help you build a portfolio according to your own needs, answer all your questions, help you transition a portfolio. Whatever your needs are, I will do my best to help you. I love doing these sessions. I limit myself to 4 a week. They sell out very quickly, so I apologize for that. I know many of you keep sending me emails. I always miss the consultation. Well, I can't do more than 4 a week because I need the time also to create more content. So just look at the little message on the homepage there, right on top of the calendar, to get a status if the calendar is open or not. But I will let you guys know via YouTube community post and a Facebook post when the new appointments are open. Speaking of Facebook, make sure you join our Facebook group, which is almost at 10. We're almost at 10,000 members now and going up every day. So it's a nice little group where people post their questions, they put their portfolio, and we all try to help each other out when it comes to passive income investing. So make sure you join us there. We're also on Instagram. If ever you want to know a little bit more about our personal day-to-day life, you could follow us on Instagram if you use that social media platform. Don't forget, guys, the mission of this channel, my mission, will always be the same. It's to help everyday, normal, regular working people to invest on their own in order to build their own stream of passive income to enhance your quality of life and when they become financially independent. So how do I always leave you? Make sure to continue staying safe, stay healthy, and of course, stay passive. See you next time.